So, if you're scratching your head, trying to work out how you're going to finance the renovations of your place, or perhaps a new build, you've come to the right place. Today we're going to break down the ins and outs of construction loans and how they are utilized. Hey everyone, welcome to the channel. If you're new here, I'm a licensed mortgage broker with an extensive property investment background. I talk all things property financing and investing. If you're interested in watching more from me, subscribe and turn on notifications to keep up with my latest content. Let's jump in. So, what purpose is a construction loan used for and how does it work? You can use a construction loan for a new build, a knockdown and rebuild, or a major structural renovation such as moving walls or adding a room. The process of getting a construction loan works much like a standard home loan. The initial steps involve organising your finances and providing essential details such as income, employment status, liabilities, etc. However, where it's different to a conventional home loan is that a construction loan requires submission of extra specific documents related to the construction project. Things like detailed plans, a building contract, the builder's insurance details, and comprehensive quotes from contractors. The lender will also organise a tentative on completion valuation as part of the application process. This is done to confirm the projected value of the home once it's built. In regards to the loan, there are various loan features which you can take. Interest-only payments, or even an offset account. The way this type of financing works is by dispersing funds to the builder in stages or installments, which mortgage brokers and lenders call progressive drawdowns. Unlike other loans which provide a lump sum disbursement, this loan structure provides financial support incrementally as the construction project advances through its various stages. Prior to commencement of construction, the builder compiles a building contract outlining the total cost of the project. The overall cost is then segmented into distinct stages with corresponding costs allocated for each phase. Typically, this process encompasses 6 key stages of construction. It's important to note that you only pay interest on the funds you've used at each stage. So for example, if you're halfway through your $600,000 construction, you're only paying interest on $300,000. At the completion of each stage, an invoice is issued by the builder, assessed by the bank, and paid by drawing down on the loan. When the bank is assessing whether to release funds or not, it's typical for them to send out a quantity surveyor to the property to ensure the amount they are dispersing to the builder lines up with the work completed. Let's have a look at ANZ's construction guide as they make it simple to understand. Once your building contract is signed, the first step is the deposit, which is 5% of the total build cost. This provides your builder the funds required to start working. Once the slab has been laid, the bank releases a further 10 to 20% of funding. We can see that each stage has a pretty wide range, and that's to be expected. Not every construction project is the same. Next up, we have the frame stage, which includes the frames, trusses for the roof, brickwork. Then we have probably the largest bit of the construction project, which ANZ calls the lock-up stage. This includes your roof, doors, and windows. At the completion of this stage, the property should be lockable like any other home. Then we have the internal fit-out stage, things like power points, lights, plumbing, and plasterboard. The last payment is to be provided only on completion. At this stage, the finishing touches such as painting, kitchen cabinetry, tiling should be complete. The banks will often conduct a final inspection to confirm the project was completed in accordance with the plans and specifications agreed upon by the lender before releasing the last payment. However, my suggestion is before requesting the bank to release this payment, I highly recommend you get your own certified building inspector to make sure all the work completed is compliant. Finished homes look amazing. However, could be hiding major building problems you won't be aware of. You don't want to be up for tens of thousands of dollars in rectification costs if something wasn't done right. Don't rely on state governments chasing the builder if something goes wrong. Your best bet is ensuring any issues are solved before they receive their last payment. Typically, whilst your home is being built, you pay just the interest component of the total drawdown amount. And once construction is completed, your construction loan will convert to a normal home loan with a principal and interest repayment structure. I need to point out a common mistake. Some people have enough in the bank to get started. So, instead of waiting for the bank to enter the arrangement from the start, they begin construction, laying foundations, and then try to get a construction loan for the rest. Don't do this. Don't start any construction until your construction loan is in place. You will most likely disqualify yourself from a construction loan if you do. This is because most lenders follow a strict policy of not accepting a partially built home as security for a mortgage. Generally, you're expected to apply for a mortgage either before commencing construction or after the build is complete. The financing around these loans is strict. And just to drive the point, even with a construction loan in place, if you find yourself in need of a relatively small amount to complete your project, most lenders are reluctant to provide any extra financing. If it's a small amount, you could try to go back to your current lender and see how they may assist you. Perhaps they will provide further funding to you or ease the terms of your loan. In the event that fails and you have no other options left, you will most likely need an incomplete construction loan. So, how do you get one if necessary? As a mortgage broker, I have access to several non-bank lenders which offer these loans. I can engage these lenders on your behalf. They do incur establishment fees most of the time, and yes, they tend to be more expensive than a conventional construction loan. However, in a pinch, it can provide you with the means to let you get on with your build. If you require financing to build your home or finish your project, feel free to reach out to me from the details below. I know I'll be happy to assist you. Guys, that's it for today. Thanks for watching. If you found value in this video, please give it a like. And if you want more content from me, please subscribe. Good luck with your projects. See you next time.